next thing we really want to talk about here is what we call ABC. This is activity-based costing. Okay, so if we remember, if we look back in Chapter 3, we had these things called cost drivers. What are the items that are driving up our costs, right? Well, activity-based costing is a system for assigning costs, those overheads, to the cost objects, the work in process inventory. So what is the overhead that's increasing the value of this inventory? And then we're going to do that based on the consumption of cost drivers. Okay, so if we need to review, we can go back to Chapter 3 and review that. I'll also provide a table for you guys that gives you a pretty good list of what we call cost pools, as well as different cost drivers and types of costs, activities, all kinds of good stuff like that. Again, here we're going to talk a little bit more about those facilities sustaining, product sustaining, batch-related, unit-related type costs. Okay, so with the ABC system, we're going to use more than one predetermined overhead rate to assign those costs to production. This is how we're going to allocate these manufacturing overhead costs to our work in process inventory. Okay, what this does is it allows us to be somewhat more accurate with the allocation of this manufacturing overhead. So if we can say, we have this building and it depreciates at a certain rate, right? So we think the building's got a 50-year useful life. We have our depreciation cost, right? Your depreciation expense every month or every year. Well, what square footage are we using to produce this product? And we'll divide that depreciation cost by that square footage, and that'll be the amount of manufacturing overhead that we allocate to work in process based on owning the building. Okay, so there are 6 steps for doing this. Steps 1 and 5 you do before the period even begins. You're taking historical numbers, you're looking at data, and you're making decisions, and you do all of these first 5 steps before the beginning of the period. And then step 6 you do throughout the period. So step 1, you've got to identify and classify production activities by level. So if you remember, these levels are facility sustaining, product sustaining, batch related, and unit related. So like I said, there will be a table I'll provide to you guys that'll give you a pretty good description of these activity levels and what you can expect with those. Okay, you've also got to assign what we call a cost pool. A cost pool is basically a group of costs that change in response to the same cost driver. So anything that is going to be changed by the number of square feet in a building, the number of hours it takes to design something, that kind of thing, those are all going to fall under the same cost pool. Okay. Step 2 is to determine the appropriate cost driver for each activity. Okay. Since these are measures used for the activities being performed, they must relate as closely as possible to the activities examined, right? An easy example to think of, I gave you the depreciation example. So if you own the building, right, the depreciation, we're going to allocate that based on the number of square feet that we're using for the production facility. Okay. The example I've got here is that if you're designing a product, that's a product sustaining activity. So the cost driver that you might want to use would be the number of hours it took to actually develop that product. Okay. Like I said, page 267 in your textbook, as well as the file that I'll upload to our folder this week, are going to have some pretty good examples for you. Step 3 is to estimate the amount of overhead related to each cost driver. Okay, so once you identify the cost, once you identify the driver, an estimate of how much each will be incurred during the period. You just make that estimate. Again, these are all estimates, so your best guess, right? Step 4 is to estimate the amount of each cost driver to be used. So this is going to require input from other departments, right? This usually takes place during the planning and budgeting process. We are going to budget for 5,000 units. We are going to budget for 10,000 units. Whatever the case is, you're going to have somebody that tells you, hey, it typically takes us, we have a standard, and the standard is we have to buy this much. Each product takes this much, this many hours, and produces this many dollars when we sell it. Okay, so you'll use those standards to budget with. So step 4, typically part of your budgeting and planning process. Step 5 is you're going to determine the predetermined overhead rate for each of the drivers. Okay, to do this, you're going to take the estimated total manufacturing overhead for the cost pool, for the entire cost pool. You're going to divide it by the estimated amount of the appropriate cost driver. Okay, you'll use this rate throughout the period. When you go to allocate or estimate manufacturing overhead per unit of the cost driver. So when you're going to move some of that manufacturing overhead from your raw materials to your work in process account, this is when you do that. And then finally, step 6, that's applying that manufacturing overhead to your WIP account. Okay. Remember, when we do this, we are increasing the asset, okay, as the cost driver is used, not as we incur the cost. We already paid for the glue. We already, whatever the case is. Now we're just going to increase that WIP asset as we use that glue, as we use the man hours, as we use the design hours, as we use the square footage. We're going to incur it, which is going to increase that WIP account. So let's take a look at an example. Okay. This example is going to illustrate a full use of ABC while producing iPhones. Okay. So the first thing we're going to want to do is identify the levels in the activities. For simplicity's sake, we're just going to assume that there's going to be one of each of the 4 types of activities: a facility sustaining, a product sustaining, batch related, unit related. Okay, there'll be one of each. And we're going to choose what our cost drivers are. What is our cost driver for facility sustaining? What is our cost driver for product sustaining? Okay. Then we're going to estimate the cost. These are identified. The activities that we find in step 1 are going to result in 4 cost pools with 4 different cost drivers. Okay. Step 4. Okay. We're going to assume that a budgeting analysis. We're going to estimate cost driver usage. Okay. We're going to say, hey, this budget analysis of iPhone reveals the following things to us. We have total production facilities that occupy 20,000 square feet. The development department estimates using 1,000 tests. We have 160 production runs planned, and machinery is expected to operate for 5,000 hours during the coming period. Okay, so here we can see we've got a facility sustaining activity. It's using the building. The estimated cost is $500,000, and we're going to use the number of square feet as the cost driver. Next, we've got a product sustaining activity. That type of activity is developing a product. We estimate it's going to cost us $200,000. The cost driver that we're going to find per unit is the number of tests required. Our batch-related activity level, the type of activity is setting up and inspecting the machines for production. Okay, that's going to cost us an estimated $240,000, and our cost driver there is going to be the number of production runs. Finally, we have our unit-related cost. The type of activity is using the machines. It's an estimated cost of $80,000. The cost driver that we'll use is the number of machine hours required. Okay. So just so you know, this is a simple one. More complex ones, you will have many different facility sustaining costs, many different batch related costs, many different unit related costs. So you'll have to be able to classify those. Okay. So step 5, we're going to calculate the predetermined overhead rate. Remember, this is the rate that we will use when we are estimating how much we want to allocate to our work in process account. Okay. So we're going to divide the amount of each estimated cost pool by its estimated cost driver. So the building cost, it was $500,000. We had 200,000 square feet. So that tells us we're going to have $2.50 per square foot required. Product development costs, $200,000 divided by 1,000 tests that we plan on running. These are our budgeted figures, if you'll recall. $200 per test. Setup and inspection costs, $240,000. We budgeted 160 production runs. That's going to be $1,500 per production run. And finally, you have machine costs of $80,000. We have budgeted for 5,000 machine hours. That's going to be $16 per machine hour. Now, hopefully you see how all of this is coming together, right? So now we're going to apply our overhead. We're going to assume that during the period, the production of iPhones actually required the following resources. Okay, these are our actual requirements. So we had 20,000 square feet of space. So we're going to take that 20,000 square feet of space, we're going to multiply it times $2.50. That tells us that we had $50,000 of indirect building costs. We actually ran 180 tests, so we're going to multiply that times the $200 estimate that we came up with in step 5, right? That gives us $36,000 in production and development costs. 12 production runs is what we actually ran, so we multiply that times the $1,500. That costs us $18,000. And then finally, machine costs. We ran it for 400 machine hours times $16. That's $6,400. Okay. So what we've done here is we use those predetermined rates from step 5, and then we are going to apply this manufacturing overhead. If you total those together, those are all going to be part of our manufacturing overhead. We're going to apply it to production or to our work in process account this way. Okay. So you have an increase to your work in process iPhones of $110,400. Remember, this is not an expense yet. This is a product. This is a value add to the product. So we are increasing this inventory account. We are going to decrease our manufacturing overhead: building, product development, setup inspection, and machine usage. This is all coming from the raw materials or raw direct materials account, right? Because these manufacturing overhead represents our indirect costs of that. So these are flowing from step 1 to step 2, step 2 being work in process. So we're adding the value of these to this asset. Okay. So if you have any questions, feel free to reach out. I will do my best to explain it to you, and we will pick up with the next video.